What's going on, traders? Welcome back to my YouTube channel for another lesson on how to trust the process. Jokes aside, it's been an absolute epic week this week. And boy, oh boy, if this week doesn't illustrate what patience and discipline really means in terms of avoiding or walking away from bad days and waiting patiently for really good days and weeks like this, then I don't know how you're going to learn. But other than that, if you're new to the channel, welcome. Make sure you subscribe, hit that like button if you enjoy the videos, turn on notifications for future videos. And today we're going to be talking about why I took a buy in a sell buy structure. I'm getting lots of messages after posting my USD CAD winning trade today. It was just a 1R risk reward ratio trade, just a simple one, in and out for Friday. Yesterday, I managed to bank a really nice 4R on USD CAD for sales. Today, just a little 1R on the way up. Now, I called this trade out pre-London, I believe it was. I'll just share that with you now. So as you can see here, traders, I called the trade this morning around 7:52 a.m. for USD CAD buys. Even though the behavior of yesterday was pretty bearish, what I'm focusing on is the sentiment for today. That's what's important to me. So I identified that the overall structure from the Asian session was actually pushing bullish, which is what I'm looking for, especially when the market's failing to break lows. I'm looking for price to close above a key level to indicate a potential continuation, or I'm just looking to take the immediate breakout. Now, I'm not here to talk about my actual strategy in details because that will take a long time. And of course, that's reserved for the members of the academy. But the idea is this: if the market is going to break above a structure in an uptrend, then the next phase that I anticipate in the market to do or create is a higher high. So that's why we can take these trades at these times. Now, I usually like to take my trades pre-London Open because of the volatility at London Open. So if I'm in a trade, I will hold it during the London Open. If I'm not, I prefer to avoid it. And then as you can see here, about 15 minutes later, I'll smash the 1-to-1. And that's it. We walk away. As I said earlier, some days we take 1-to-4s, some days we just take 1-to-1s. It is what it is. But let's head back over to the charts and talk about this. So the idea is this, traders: if I'm looking at the markets and I can see that the overall structure of the market is pushing bearish, this was yesterday, right? And I'm sure a lot of you got into some really decent trades yesterday because the markets were unbelievable. We had Aussie dollar movements, we had CAD, we had pound, we had absolutely everything. But the overall behavior of the market is pushing bearish. Now, if I'm planning to take a trade for today, so I wake up for a London session and I'm looking to take a trade, the first thing I need to identify is the current behavior of the market. If we look at the market here, what you'll see is the market is moving sideways. This is through the Asian session or New York close through the Asian session. Now, as you can start seeing here, we start to identify price failing to break structural lows. So the behavior now is starting to tell us, well, yesterday we was bearish. There's a lot of information to indicate CAD strength, but at the moment we're continuing to fail. Now, the way I view this is like a brick wall. The candles are my soldiers, and I say this all the time. And if prices or my soldiers are failing to break through this brick wall, then there's a sign that something is happening. I'm only going to sell if my soldiers get through. That is it. My soldiers are not getting through at this stage. What I can see is that they're struggling. So I'm looking for areas in the market, especially from an intraday perspective, where I can identify a shift in either or direction, whether it be down or whether it be up. So if we mark this with the trading view tools, you'll see here we have an intraday level. So now let's go down to, let's say, the 15-minute time frame. For a very long period of time, you can see that price is failing to break above structures here. Now, we can view this as an area in the market where price is failing to break. You can also view this. You can also view this. It really is up to you. Neither is wrong, but I'm looking for early signs. And remember earlier on when I said, if price is failing to break this area, that means my soldiers are failing to break through. When I take into account information when I'm looking for breakout levels, I'm also looking to find correlation, confluence, which you can see here. So now we have the confluence. We have price failing to break. We have price breaking above areas and failing to break back in. So now I identify and isolate another level in the market. What I'm looking for is a shift in momentum. Now, the shift is this. I'm looking for price to create the structural low, and I don't know this is a low until the high is made. Then I'm looking for price to create the new higher low. Again, I don't know this is a new higher low until price starts to show signs that it's respecting structure, which is this information here. So now we have 2 points of contact, which is our structural low and our higher low. And then what I'm doing is I'm trying to isolate this whole behavior as being one behavior for the trading session. And as you can see here, if we take all this information into account, what do we have? We have a bullish candle. Now, once we have this bullish behavior in line with the previous behavior through the Asian session and the current behavior leading into the London session, my idea now is to follow this and take buys. Now, the way I take buys is I'm looking for price to break above structures. I'm looking to take immediate breakouts. I'm looking to take retests, just the simple trading ideas you hear me talking about all the time in anticipation eventually for a new higher high to be made. So now I'm taking into account the structure, the behavior, the time that it is, and how price is reacting to areas where I plan to take the trade. For me, the immediate breakout, as you could see from the previous screen where I called out the trade, was to take the immediate breakout or look for the close above. Here, I took the immediate breakout, but even if you took the immediate close above, you still would have had a great trading opportunity. Once you have that information, you place your trade, and even with the close above, we still had a beautiful 1-to-1 risk reward ratio trade. That simple, and that's why I took the trade. Now, that is the obviously breakdown of why I took USD CAD. We'll take a look at a few more pairs in a minute, but I just want to explain something. A lot of you were taking sells because the structure of the market had come back to an area where price was failing to break above. It was a wick rejection area on the higher time frames, no, on the lower time frames. Now, you would have seen from my screenshot that I mentioned that I'm not fussed about the wick rejections that were happening here, to ignore them. And the reason for that is because in a trending market, you have to understand if the market is trending down, what will happen is even if price is failing to break structures, eventually price will make a lower high and continue that lower low, lower high formation. If the market is failing to break those structures and you have an intraday trend that is pushing down and price starts to break those structures, then you have to identify the shift, because the shift is what indicates the new behavior. So yes, this was a wick rejection area, but the actual behavior of the market, because we failed to make those new lows, not just once, but a few times, I now switch my bias to failing to break new low, higher low, trend up, and then identifying what could now be a potential new higher high. Now, you have to understand, off of the back of a strong bearish move yesterday, there is a very high chance that the markets are going to exhaust. You cannot have a continued push phase market without an exhaustion. And what we look for here when we have a continued push phase is the structural high to the low being formed, and then price to at least come back to a 50% level. That is it. So if I'm taking these buys because my soldiers are failing to break the structural lows, and I'm having the bullish momentum showing signs from an intraday perspective that we're having those higher highs and higher lows, then it's a no-brainer to me that I can take buys in anticipation for price to come back to the retest level in line with the overall higher time frame trend, and then look for the continuation sells. So I'm not counter trend trading here. I'm trading intraday trends because I'm an intraday trader in line with the 4H downtrend in anticipation of the retest back to a key level before the continuation. And that is the science behind why I took USD CAD. So I hope that was useful to you. It's a very, very powerful lesson for all of you traders to be considerate of. And you will see me taking trades like this all day long. You know, it's very important that you follow a plan, you stick to it, because ultimately this is what's going to bring you a lot of money in the future. It's not about, you know, figuring out what is the holy grail and what's perfect and what is going to work for me every time. We do lose trades. I think this week we've called trades most days. I think every day actually, and we've done pretty well. I think I only had one stop loss this week on pound yen, but I managed to get that back immediately, and I shared that with you this week. Not every week is like that. We do have weeks where we take a few more losses, but when the weeks are really good, especially like this week, you have to capitalize. And all we're doing here is just combining structure with the processes of how structure is formed, along with currency strength and behavior. And that combination itself is just You can use it on any time frame you want, daily, 4 hour, 1 hour, 30 minute, 5 minute, 15 minute, 1 minute. It doesn't matter. We trade it all. So find out what works for you, stick to the plan. And yeah, I can promise you traders, you'll start seeing some success with your trading. Anyway, just a little lesson for you. The idea behind today's trade, I was going to go and share some more trades with you. I think we'll do that next time. But other than that, I just want to wish you all a fantastic end to the week. Click that like button for me if you enjoyed the video. Subscribe if you're not subscribed. Turn on notifications. And until next time, continue to trust the process.